Hello and welcome to another episode of Merrill Talks. I'm your host, Yannick Pace, and with me is the Merrill Fund's portfolio manager, Marc El-lazidi. Marc, thank you very much for being with us. I hope you've had a good Easter break. So in today's episode, we're going to be continuing our discussion about Europe, as well as touching upon a number of other areas. But before we delve into today's discussion, a quick reminder that it is only intended for information purposes and in no way constitutes financial, investment, or professional advice. So with that out of the way, Marc, welcome once again. I was hoping we could carry on where we left off last time with our discussion about Europe. I'm sure you remember last time we spoke about quite a few of the problems, as well as the challenges laying ahead. But at the same time, we've seen positive results. We've had better than expected growth figures, and European equities also seem to be doing quite well. So surely things aren't all bad, are they?
Yes. Hi. Good afternoon, Yannick. Not so bad, it seems like. When you see the trajectory of the stock market, I would say it's impressive. I think we can notice several positive factors. The first one, I will say, is the Chinese reopening. I think investors, they want to minimize their risk. Why I'm saying that? Because there's the current tensions between US and China, and everyone is aware about it. And if you wish to avoid this volatility surrounding the Chinese stocks like Alibaba, GD, Pinduoduo, or I will say a potential delisting or government interventions, sometimes it's better to go in direct investment. Let me explain to you why. Because direct investments, you are facing this type of issue, delisting, government interventions. But when you want to target directly the Chinese consumer, you can use European luxury brands. And I think they are the best candidates to play the Chinese reopening. We will discuss a little bit later on this luxury brand. But I will say another positive factor, I will say a mild winter. We have been facing a mild winter, which means like the doomsday scenario didn't take place, which is quite good for Europe. But I think last time, Yannick, you spoke about the US investor. You have some comment on that.
Yeah, I was going to say, I suppose there's also the fact that European equities are still relatively cheap, and at the same time, you have, they're presenting a good opportunity for investors, especially, I guess, investors in the US who have made quite a bit of money in the stock market over the last couple of years. Is this the case, and do you see it lasting throughout the rest of the year?
Yes, definitely. As we discussed in the last webinar, definitely the US consumer, the US investors have a lot of money to deploy. And I think Europe was the right recipient for that. Now, the question we should ask ourselves, it's this new summer, which is summer 2023, it seems like we're going in the same directions than summer 2022. So it was not like, you don't feel at the moment, it's just a one-off. So we are still in a post-pandemic world with a lot of positive catalysts pushing the things in the right directions. And I will say Europe is quite dependent on the tourism industry, especially in the South Zone. So I think it could be a positive momentum for Europe. Now, everyone is enjoying the landmark that you can find in Europe. I mean, everyone's happy to go on tour. In Paris, seeing the Tour Eiffel Tower, going to Rome and the Colosseum, etc., etc. I think when you go in this kind of destinations, you're happy to spend money. That's why I say it's changing your mood. Definitely.
Yeah, I guess Europe always presents that added cultural element that kind of you can only get in Europe, and I suppose it is a major driver for the bloc. But it's good that you said that, because it brings us nicely to the next point that I wanted to raise with regards to Europe, which is the luxury brand market, which in a sense is another market that is Europe's, and which it's a strong dominant player in. So something you said last time, which really struck me, was when you asked, where the European Googles are, and it's a good point, and it's one that illustrates how Europe lags quite a bit far behind the US and China when it comes to tech and these innovative industries. But at the same time, can't we similarly ask, where the US, the American Louis Vuittons are, in the sense that aren't luxury brands just as legitimate a business and one that Europe should be very proud of?
Yes, this is the right question here. I mean, let's give a brief definitions of the luxury brand for the audience. I know it seems like quite obvious, but let's think about the French brand here. The French brand, it's like quite iconic, and they are producing very recognizable products from Chanel to Hermes. So I will say these iconic products, they have become symbols of luxury and status. And it's going beyond that, because they represent a lifestyle, a particular way of living, and they explore the concept of the French art and the art of how to live in a different way. And that's why it's interesting. And as you can see on this beautiful map of Europe, we have surrounding us in Europe with very famous brand, which is Christian Dior, Hermes, Louis Vuitton, Jesmond in Switzerland, Moncler in Italy, Hugo Boss in Germany.
I guess with most luxury goods, one can, in a sense, safely assume that the market will continue to grow, because people are always going to seek out status, seek out fashion items. So I imagine when it comes to global consumers, there's always going to be some demand. Whether it's enough to sustain, economic growth for Europe is I guess, another question.
I think for talking about the luxury brand, especially the European one, I mean, we are going beyond, I will say, a short term. It's more like a structural trend here. I'm saying this because if you see Asian consumers, or especially Chinese consumer, they are not very versatile, and they are really inclined to add more to their collections. There is a second-hand market for bags and clothes, etc., in China. And my point, it's a very long-term positive momentum coming from the Chinese consumer. Now, in a medium-term momentum, I will say the American consumer is also quite present, coming to Europe, shopping in Europe. It's quite trendy to come to Europe and shop, to do shopping here. And that's why I say, if you combine these two consumer, I think it's quite sustainable in the long run for the European luxury brand. And that's why it's quite important. So yes, there is a long opportunity in Europe in this type of sectors, because there is quite a high demand, and I will say a more sustainable demand coming from Asia, in particularly from Japan and China. But let's explore, to discuss about this, let's explore the chart. So here, I want to focus on three major countries: France, Germany, and Italy. So for France, we got Louis Vuitton. For Germany, we got Hugo Boss. And for Italy, we have Moncler. Let's have a look of the chart here. Now, as you can see Hermes, you can see Louis Vuitton. What a nice trajectory. Since the rally took place beginning, I will say, of October. We discussed already, we took this period because I think it's interesting, because the rally took really place at the beginning of October. And the trajectory seems like fantastic. Star, in this case, it's Hermes. Hermes is quite special because it's mono product, when Louis Vuitton is also have some spirits in these things. Now let's move in the direction of Germany with Hugo Boss, quite resilient. And you can see even here, it's from 1st October to now. And what happened during this time, Silicon Valley Bank went into bankruptcy. So we can see here clearly certain resilience of these stocks, this European luxury brand. Let's move to the last one, which is Moncler. Fantastic. I mean, fantastic trajectory. Moncler, just to give you an idea, more than 50% of its turnover is coming from China here. So again, if we see against the Euro Stoxx 50, which is the benchmark for Europe, we can see that they have been outperforming, even in the light of Silicon Valley bankruptcy.
So you just to shift slightly, you mentioned Silicon Valley Bank earlier, and I would imagine most viewers will have followed the happenings in the US and the fears of a banking crisis. Europe seems to have been more or less spared, or there was not much of or less of an effect, especially on European banks. Is it fair to say that the conservative nature of the banking sector, while not great for nurturing innovation, offers the block safety in times like these?
Yes, definitely. I mean, European banking landscape is highly fragmented,
Yeah,
and quite risk adverse. I think it's more like how is the things on the funding side, and the roots are coming from the 90s, because in the 90s, US has shifted in a direction of capital market, which was not really the case of the European banks, except few banks like, as we know, Credit Suisse and Deutsche Bank, but they have been very conservative, more in the direction of loans than issuing new bonds, etc., etc. So if you take the case of the Southern Europe, it's too dependent on the big banks. And if you check, for example, the indices from Spain, Italy, Greece, the banks are playing a major role here. Why? Because we are facing a lack of disintermediations in these regions. And let's have a look of the three major countries here. Again, France with BNP, Deutsche Bank with Germany, and Intesa Sanpaolo with Italy. What a nice trajectory here. But why we put 1st of October up to the 8th of March? Because it's before we see Silicon Valley banks. Let's go now in Germany, also Deutsche Bank. Let's go now in Italy, Intesa Sanpaolo. Quite impressive, I will say, trajectory. I mean, we know that European banks are coming from a difficult time, which was like interest rate at zero, but it's quite stellar, this trajectory. Now, let's put ourselves in the after Silicon Valley bankruptcy. And we can clearly see the impact was here. So I will say there is a global contagion. Even the European banks are more, I will say, should be more immune from a balance sheet perspective, because the ECB is quite strict. The Fed is still strict, but didn't have to intervene in the way like the Fed has to say, okay, we will cover the deposit up to 250,000, which is quite a big move. There is not this level of panic here in Europe, definitely. So it was, like I say, we are not in the directions of innovations in Europe. We are not specialized on funding tech and innovations, because we don't get access like the Americans are getting access to the capital market. So clearly here, the banks in Europe have been quite in a good shape, but have been impacted by the contagions. So wait and see. I mean, here in this chart, you see how's the things going. And honestly, it speaks for himself here in this chart. So it's like since 8th of March to now.
So with respect to being able to support innovation, what in your view does the banking sector need to do if innovation is to play a more important role in Europe?
I mean, the problem we are facing in Europe, like I say, we have national champion, but we don't have European champion.
Yeah.
So we are going in the same story that we discussed last time in our last webinar, that we don't have a European champion. And the problem is the border. The border, we don't have like a super bank who's covering Italy, Spain, France, or Germany. And that's the issue here. So BNP, for example, is the biggest bank in Europe, but again, not be present on too many countries in Europe. So that's clearly here. And I think why we appreciate, for example, the Nordic, because they have been starting and they are more in the direction of the capital market compared to the South Zone. And they are more in the direction of disintermediations. And I think it's quite important. Now, in the South Zone, as we know, we are not enough sophisticated yet to go in the capital market.
Do you think it is something that will happen eventually, or is?
I think the regulator, the ECB, is quite tough with the banks. I mean, everyone's keep in mind what happened in Greece, etc., in Cyprus. So definitely the ECB is quite concerned about this, and they seems like to continue to hike in a certain directions to kill the inflation. So again, I think we are still at the stage that the ECB doesn't want to do something in these directions. Don't forget one thing: business cycle in Europe is lagging probably 6 to 12 months compared to US. So it's too early to say it, but I will say so far there is no contingence from the US bank to the European banks.
Well, let's hope it stays that way.
I mean, exceptions, we're talking about Credit Suisse, but this is a different thing. I mean, the dream of Credit Suisse was to become like a US bank, which was also the case of the Deutsche Bank.
So last week we saw French President Emmanuel Macron visit China together with the EU Commission President Ursula von der Leyen for a 2-day visit, which came under the backdrop of increasing tensions between China and the US. So first of all, how important is, I mean, we've already touched upon it, but I hope we could maybe delve into the importance of China to Europe a bit more. How important is China to Europe?
I think it's quite crucial. I think the message of Macron was clearly to give a strong message to China that you Chinese consumer, you Chinese government, we happy to have a good relationship. That's clearly the message here. So we want to be different, but this is obviously the French perspective, and that's why he took in his trip the EU Commission's president, even if she was not so happy to be in the trip, it seems like. I think the message here is like, okay, we are going in your directions. You will design a massive contract with Airbus, and on the other side, Europe is in an agreement to buy some LNG, liquefied natural gas. And I think we are going in these directions to be a little bit different. But obviously there is, as we know, the problem of Europe, there is multiple voices, not one.
Yeah.
I will say there is 3 spheres of influence. There is, I will say, the South Zone, which is with France. I'm talking about France, Italy, Spain, Portugal, etc. And on the other side, you have another sphere of influence, which is Germany and the Eastern European countries. And the third one is the Nordic. So we are facing a problem here that, like we say, no national champions, but also not one voice to speak in the name of Europe. So it's very difficult. It's too early. I think Macron is going in the directions. He knows that China wants to have a very good dialogue with Europe. Like, for example, they start to have a good relationship with Saudi Arabia, which is quite a surprise, especially for the Americans. But the problem is Germany again. So we are coming back on that story between the relationship between France and Germany. This Germany wants to go in the same direction than France. That is the. I
But
think
presumably Germany is also quite dependent on the Chinese market, in the sense that any decoupling from China, I would imagine, would hurt Germany just as much as it does France, will it not?
correct, but in a different way. We spoke about consumer discretionary with luxury brand. I will say Germany is more like industrialized, automobiles, etc., etc. So it's a different relationship, and we know that when Chancellor Merkel was in charge, she was visiting China quite often. Now the new chancellor doesn't seem to go in this direction. So I don't know. I mean, the signals coming from Germany seems not so clear at the moment with this new chancellor. That's probably a problem. When Macron was like, okay, let's go and speak, but Macron has to face so many issues at home. With, like I say, France is on fire. So
Yeah, no, it probably couldn't have come at the worst possible time. But so, okay, what about the reverse of the relationship? In the sense that, like, how important is Europe to China? Because presumably, I guess from the Chinese perspective, they would rather have their own luxury brands, presumably, or spending, happening within China. So I guess the question is, to what extent can Europe kind of bank on the Chinese market being there if perhaps the Chinese would rather not be too dependent on Europe themselves?
the point is, I think for the Chinese consumer, it's easy to replace maybe American brand, but not the European brand, because European brand I quite associate with, like I say, landscape, and that's the point. I mean, you think about Italy, you think about Paris, you think about, I don't know, Portugal, Spain, etc. So I think it's very related to the locations. When in US, it's not really the case. At the moment, what is the driver of the Chinese consumer? It's the actors, the actress, because they are the influencer in China. That's clearly these people who are dictated, I will say, in the way, the trend. So I'm not so concerned, especially if you have Hermes, for example, in China. It's state of the art. That's the point. It's a status. It's a luxury brand. Or if you have your BMW, that's the point. So I will say Europe could continue in the right direction. I'm talking about the European luxury brands, when the American one, like, they could be more versatile, especially with the current context.
And I imagine there's also the factor of maybe society in China being having more respect for hierarchies and tradition. So I guess there's always going to be value in a brand that has existed for many years and has this reputation, whereas maybe American consumers are more prone to trying new things and whatever's in fashion at the moment. Is that fair to say, you think?
Correct, exactly. I think your summary is perfect.
And so Macron has obviously gone to China. He's faced quite a bit of pushback, including from the US, which might feel that his statements suggested some form of support for China. So how do you see it playing out within Europe, both within Europe in terms of the opposition to the position taken by Macron? Do you see this being adopted as the European position, or how does Europe navigate the tension between China and the US?
I think Macron is going in the same line like General de Gaulle used to be, like, be different, not be a part of NATO, etc. I mean, 2 or 3 years ago, he was already mentioning that, do we really need NATO? That's the point. So he's going, like, really in this direction. Now, Germany is in a different approach. Why? Because they opt for the F-35, for example. When the French, they don't need, because they can use the Rafale to carry the nuclear weapons, because that's the point. So again, we come back on the discussions. Do we need a European army? That's the point. So again, I think at the moment, the future of Europe, even if we have like very lot of positive momentum coming from the tourism industry, the brands, etc., it's like to find a dialogue between Germany and France. This is crucial for the weeks to come, for the months to come, because they need to sit and have a dialogue how to shape the future of Europe.
It's like, so like the most important factor to Europe's relationship, both with China and the US, is ultimately the relationship between France and Germany. And before that is kind of, I guess, sorted out and we have a bit of a common path, it's in a sense almost pointless to discuss what relationship Europe will have with China, for example.
Yes.
Because there is not one Europe, so to speak.
Correct. And like I say, there is, for me, just to say, there is like 3 sphere of influence, which is southern zone with France, Spain, and Italy. I would say east zone with Germany, Poland, Hungary, Slovakia, and I will say a third one, which is the Nordic one with Norway, Denmark, and Sweden.
I mean, I must say I do find Macron's narrative to be appealing in the sense that there appears to be an attempt to take the bull by the horns, as they say, and actually plot a path forward. I also kind of appreciate his statements about the need for Europe to maintain a good relationship with kind of both sides, especially given its position as, it isn't necessarily a world leader in tech or in innovation. So it is in a sense secondary to the current tensions and the conflict taking place between Europe and between the US and China. So I mean, I guess we'll have to see how it all pans out, especially with respect to whether Macron can actually find support across the rest of Europe for his plans.
Yes, definitely. I think this is the last mandate for Macron, so he's fighting for his strong convictions. I mean, like I say, like he's doing in France with the problem of the age of retirement, is like using 49 resolutions, which is forcing the things. It seems to go in the same directions. Like I say, it's his last mandate, so obviously he will go in his very strong conviction in these directions.
So I guess with that we can wrap things up for today. I don't know if you have anything else to add as a concluding remark.
No, I mean, definitely, like I said, there is like a lot of opportunities in Europe, especially on the luxury brand.
So with that, thank you very much for following, and remember, if you liked this conversation, to subscribe and follow our YouTube page. Thank you very much for following, and have a good evening.
Thank you very much. Bye-bye.